Right, let's iron this out, because every time someone mentions the rich don't pay tax, people lose their minds. But usually it's the wrong people complaining and the wrong people being called rich. People think anyone earning 150k is rich. Babes, that's a senior manager with a stressful life and a BMW they don't even own. People think a business owner earning 400k is rich. No, that's just someone who works too much, pays too much tax, and spends their evenings Googling how to switch accountants. That was me winking, by the way. When I say the super rich, I'm talking about people who haven't worked in 3 generations, whose passive income pays for entire towns, whose family names own postcodes, and who get richer while they're sleeping, swimming, or eating foie gras on a Tuesday, because the world literally pays them. They're not living off wages, they're living off ownership. The average person earns an income. A wealthy person owns a few assets. The super rich, the super wealthy, own the companies that own the assets. They're not even thinking about tax like you do. You're thinking PAYE and NI. They're thinking corporate structures, trusts, valuation freezes, offshore holding companies, and multi-generational asset extraction. So let's break it down properly. Who actually are the super rich, and how do they legally, openly, publicly, and with no shame at all, basically pay no tax? What super rich actually means. When I say super rich, I mean families who built dynasties so strong that the grandchildren are still coasting. Let's run through a few examples so we anchor this properly. The Grosvenor family, I've talked about these before, fascinating. Duke of Westminster, the Grosvenors basically own Mayfair and Belgravia, not the buildings, not the flats, the land, the entire postcode. 10 billion net worth and growing every year through property appreciation, corporate strategy and smart structuring. The current Duke is in his early 30s, inherited billions, doesn't work the way we think of work. He oversees a corporate empire, but he isn't clocking into a shift. The Walton family, Walmart. The heirs to Walmart receive tens of millions per year in dividends alone. They're not working checkouts, they're not stacking shelves, they're not CEOing or CFOing or COOing, they simply own. The Mars family, Mars, M&M's, Pedigree, Whiskers, you name it, multi-billion private empire. Most of the descendants aren't working in the business. They're asset managers of a dynasty. The Westons, Burberry, Selfridges, Primark, retail royalty, old money, snowball effect. Dynasty equals wealth forever. Elon Musk, Jeff Bezos, Richard Branson, not because of income, but because of equity. Owning the company is what matters. The point is, these people don't rely on salaries, they rely on ownership, and ownership behaves completely differently in the tax system. Let's talk about the single biggest misunderstanding in the entire conversation about wealth. Middle class mentality. How much do you earn? Wealth mentality. What do you own? Super rich mentality. What companies do I control that own the things other people don't even think about? Middle class, salary, wealthy, rentals, super rich. I own the company that owns 40,000 rentals, 12,000 acres of land, 6 hotels, 3 shopping centres, a logistics chain, and a minority stake in a company that owns 10 more things. Once you understand the difference between earning and owning, you understand how the super rich escape tax. Income is taxed aggressively. Ownership is taxed lightly or not taxed at all until something is sold. Wages are taxed at source, dividends are taxed later at lower rates, capital gains are taxed lower, loans aren't taxed at all. Trust distributions can be structured to be massively tax efficient. Companies can offset expenses, companies can reinvest, companies can defer. Do you see the theme? The tax system isn't designed for employees, it's designed for owners. And the super rich don't even see income the way you do. Income for them is a choice, not a necessity. Here's where people start frothing in the comments. You think the super rich are avoiding income tax. They're not avoiding it. They simply don't have income. Think about it. If your wealth comes from wages, you get taxed. If your wealth comes from assets, you get options. The super rich Structure everything like dividends, capital gains, offshore subsidiaries, holding companies, trust distributions, valuation freezes, gifting shares instead of cash, companies owning companies, losses offsetting gains, intercompany loans, interest deductions, share buybacks, and my favourite, borrowing against their own assets. They will literally borrow £2 million against a 100 million share portfolio and live off the borrowed money tax-free because loan proceeds are not taxable. And the public is like, why don't they pay income tax? Because they don't have income. They're not avoiding the system, they're using the system exactly as it was designed and correctly because the system was designed for owners. Let's break down the two strategies that make people absolutely lose their minds. Strategy 1, they don't sell. The second you sell something, you crystallise a tax event. So the super rich just don't sell. They refinance assets, borrow against their equity, use loans to fund their lifestyle, let assets appreciate, pass them down through shares, not cash, keep wealth inside corporate wrappers, delay taxable events for decades, push liability down the road, or eliminate it entirely through planning. And by the time any tax is actually owed, the next generation has inherited the company, not the assets. So the tax resets, gets reduced or gets planned around. Strategy 2, borrowing against assets. If you borrow 2 million against a 50 million share portfolio, there's no income tax, no capital gain, no dividend tax, no inheritance tax, no NI, no PAYE, no taxable event at all. You just pay interest, which is often deductible through the structure. Money becomes a tool, not a wage. Trusts, foundations and holding companies. This is where the general public starts screaming, it isn't fair! But it's structural. It's how the tax system is written. Grosvenor Estate. The Grosvenors hold the entire Mayfair, Belgravia empire through companies and trusts. When the Duke's father died, billions transferred and the properties didn't trigger inheritance tax because they weren't owned personally. The Walton family, majority of Walmart shares are held through family vehicles and trusts. Trusts don't die, so inheritance tax is massively mitigated. Bezos and Branson, large parts of their empires are held in holding companies, foundations and offshore structures. You can't tax what isn't owned personally. You can only tax flow, extraction, disposal and transfer. They avoid taxable events, not tax. And their accountants are top tier, generational chess players. The system isn't rigged, it's built for owners. This is the part nobody wants to admit. The tax system punishes labour and rewards ownership. You can cry about it or you can learn about it. Look at the incentives. Dividends taxed lower than wages, capital gains lower than PAYE, pensions tax deductible, trusts have exemptions, companies can deduct expenses, individuals can't. Companies can reinvest pre-tax, individuals can't. Businesses get reliefs, employees get taxed at source. Property companies avoid Section 24, individuals don't. Company cars can be benefits, personal cars can't. Why? Because the system wants people to invest, build, grow, hire and risk capital. Employees are the easy tax cattle. Owners build economies. Once you understand that, you stop being angry at the super rich and you start saying, okay, how do I become an owner? So here's the good news. You don't need $1 billion to start thinking like someone who owns the board. You can use the same principles, set up a limited company, build a holding company, own assets inside structures, stop taking everything as salary, use dividends, use directors' loans, use pensions, use allowances, build a multi-entity setup, invest through the company, use a trust later for the kids, structure your wealth properly, use the tools you're allowed, play the game the way the system rewards. You're not going to become the Duke of Westminster, but you can stop behaving like someone who lives on a payslip. The system only works for owners. So become an owner. And if you're still here, you're already thinking differently. See, here's what I do next. If you actually want to start applying this stuff instead of just watching it, start with the tax game plan. It's linked below. It gives you the exact steps to structure your income, pay yourself properly, and stop setting fire to your own money. It's £9. If you're serious, grab it. If you want the advanced stuff, group structures, trusts, inheritance planning, multi-entity setups, join the YouTube membership. That's where I break down the real client strategies behind the scenes, step by step. And if you want it all handled for you, the compliance, the planning, the structure, the tax strategy, you can book a call directly with us at tax4pros.co.uk. We'll map out your entire setup based on your numbers, your goals, and the direction you're scaling in. And finally, hit subscribe. Only about 14% of you who watch these videos actually do, and this channel is becoming the UK's home of straight talk tax, corporate strategy, and the truth about building wealth the way the wealthy actually do it. I'm Sarah from Tax for Pros, helping business owners build wealth, not just businesses. I'll see you in the next video.